Middle of January, and that is the time when the budget drafting exercise is almost midway, if not accomplished. Coincidental part of it is the fact that we are once again in the midst of the third wave, which is likely to have some upfront impressions into the budget exercise. The budget session officially kickstarts towards the end of the month. As media has reported, on 31st of January, the budget session will commence, and on the 1st of February is when the proposals will be laid before the House by the Honorable Finance Minister. Usually in India, budget has been more than just laying down the financial parameters or putting forth the statement of receipt, grants, and expenditure, etc. It is also the occasion when policy announcements are made. Some report card is furnished insofar as activities done in the past. And looking back, the budget of last year, where the main focus largely was on account of public health and the fact that we were in the middle of pandemic. Running a full circle, we are again in the midst of pandemic, although situation slightly is suggestive of the fact that things may not get or spiral out of hand at what happened during the course of especially the second wave. The concerning aspect still remains private investment is still sluggish. Consumer spending is not what it was at pre-pandemic levels, and therefore the confidence still ain't there amongst the consumers to spend. Now, discretionary spending requires more money in the hands of the common man. Now, whether personal tax rates would get tinkered to the extent that there is some more cash which is provided, and therefore there is a rife speculation of increasing the thresholds around standard deduction and providing some allowances with regard to work from home. As a corollary, the corporates do also expect that the allowances, payments, and certain ex gratia or COVID related payments should be allowed as tax deductible with some specific amendments in the Act rather than relying on the residue provisions which might get contested by the revenue, whether it is an expenditure per se related or expended for the purposes of business. We all understand that CSR is not a tax deductible line item of expenditure. Medium and small scale enterprises have been the one who have been steamrolled by the entire pandemic, and so has been the contact intensive industry, tourism, aviation, and hospitality. They both are one of the larger employers or the predominant employers in the country, and therefore they need some hand holding with regard to some concessions on the fiscal side, apart from the concessions which were forthcoming with regard to providing some liquidity or measures where banks were told to act in a benign manner, but they need some direct hand holding. The good part is that the tax collections which were reported on the direct of December 2021 do suggest the fact that there has been a 60% increase when you compare it with the figures of 2020, and 9.45 lakh crore rupees of direct tax collection does suggest the fact that the economy is somewhere on a recovery mode, barring the hiccup which we have experienced in this first quarter of the year. So the industry, in terms of real industry, requires some aggregations of investment, and infrastructure investment and private investment are the need of the hour. The government would continue to flush the pipe as much as it can, but at the end of the day, the private investment must kickstart, and the investment in and around infrastructure, and therefore some concessions on capital gains tax insofar as taxation of infrastructure investment, popularly known as InvITs, is expected. 40,000 odd crores has been raised by InvIT so far, and government believes that this is a good vehicle in terms of aggregating capital. On legislative reforms, taxpayers still believe that the manner of drafting of legislation has prompted them to knock the doors of the court than ever before. The recent experiences of reassessment related provisions which were amended, and a new scheme of reassessment was brought into the statute, and how it overlapped with the previous regime's law, a flurry of litigation, and still the matters are being contested in many high courts. So legislative drafting is something which will require some conscious touch. At the same time, the seamless integration of technology with the income tax procedure still needs fine tuning, and as a result you find the dates getting extended and a lot of glitches do get reported. The bullish run on stock market gives a sense that the coffers may suggest that there might be a little temptation to increase the taxation rates associated with short-term and long-term capital gains in so far as stock market earnings are concerned, because of the fact that the sources of further augmenting tax revenues may be far and few. And if there are areas to augment, as I said, the coffers may be looking at some further increase in tax revenue, and that's one possible source where you may find that there is a 3 to 5% increase of capital gains tax, at least on the short-term capital gains associated. With regard to long-term capital gains, would there be a slight enhancement of the tax rates? I cannot rule out that possibility. My personal view is that there is some upward revision of rates which is expected, at least on discount, to provide the balancing act, assuming that there is a tax forgo which happens with regard to providing more money in the hands of the common man, and therefore on personal tax, including deductions, assuming the deductions bar goes high and reduction goes high, and there is a tax foregone, and to equalize that, we might expect some increase in the rates of capital gains tax. As always, it's a tedious task and not an enviable one. And how the Honorable Finance Minister, Madam Sitaraman, is able to walk the tightrope and do that fine balancing act needs to be seen. In summary, in conclusion, the India's continued pacing itself with the global reforms on international taxation may find some sprinkling or inkling in the tax book, and therefore some enabling amendments may also find in the statute book if it is felt that it is the need of the hour, so as to suggest the fact that it does align itself with the commitments made to world at large in being part of the forum for minimum global minimum taxation. Not much can be expected with regard to corporate taxation. A lot of amendments have already taken place with regard to corporate tax, and further reforms making taxpayers' life a little easier, especially in the world of faceless regime, is something which would be a welcome announcement if it were to be made. All in all, the budget should present an act of consolidation, an act of moving forward, recognition of taxpayer rights, ensuring the confidence level of voluntary tax compliance goes up, and at the same time the niggles in the tax statutes are taken care of. Not an easy exercise. The ask is too much. The times are testing. But I'm sure the Honorable Finance Minister, Madam Sitaraman, will do a befitting job. Thank you.